Right, lads, welcome back. This is episode 3 of the funded documentary. We're back at it again, going again for our third 10k evaluation. Yeah, no, technically second because SFT didn't count because of that whole situation, but our second 10k evaluation, and I think you can see by the title, we blew it again. 2 accounts in 2 weeks. I'm actually on a roll. But let's actually get into the economic calendar before we actually go onto the chart to understand where the volatility was and where I was taking these trades. So starting off with the one on Tuesday, obviously with this sort of a weekly outlook, whereby we have NFP on Wednesday and Friday, and then all of these high to medium impact news events in between, there's no chance in hell I'm trusting London. Even though London did look good in terms of news, there's no chance I'm trusting London. So, and also this medium impact news here, which kind of is likely to make the euro and the pound choppy. Nah, not really a fan. So I decided to not go for New York, but to go for London close, where we have our last piece of high impact news. And that was Tuesday the 30th. So if we go over to the trade on the chart. So the thesis for this trade was we saw New York make a downward range. And we know that typically London close will come back and even out that range, or at least close some of that range in. So New York made the down range and tapped into our daily inverse for value gap here. This one right here, and saw an unwillingness to go lower. So when news came and we got our market structure shift at 10:05, we started gearing up our template here for where our entry is going to be. Now, what we did here is we put it below this wick's low right here, because I don't really trust putting it below the low when there's no wick on this candle right here that actually causes the market structure shift. But yeah, then we get tapped in here. I took half of that 1-to-1 and moved stock to break even, and then we got tagged out here at break even. So that was that trade, mitigating our drawdown from last week. We were scoping on Wednesday for London close, due to the high impact news as being in London close. I don't like trading New York. I don't know if you haven't noticed. I don't like trading New York when there's high impact news ahead of New York. So basically, if there's high impact news in London close, I would rather trade London close than trade New York, because I've seen New York chop when there's high impact news ahead of it. So I don't really like to take the risk there. So Wednesday, I was actually looking for opportunities during London close in this window here, but nothing materialized for my edge, so I just didn't take it. Then we had the FOMC statement, and then Thursday, I felt quite comfortable in London, especially with the news releases and everything. There was nothing wrong with London, in my opinion, so we went for Thursday. So coming over here, we can see what actually happened in this trade. Well, this was the original trade, right? As we can see, I was actually flicking through, because what the thesis was for this trade is it's coming up into an area whereby the daily mitigation and on the 4-hour there is a bearish order block, and then we got institutional swing points in here around the fib levels. So we got a breaker swing in here, and then we formed our market structure shift to the downside. Now off the back of that, if I flick through to the 3-minute, you can see exactly what I was seeing. So what I was seeing was this candle here. It broke structure, right? This was the candle that actually caused the market structure shift across the 3-minute and the 1-minute. So I was kind of going in to narrow down the risk appropriately, and essentially I chose to put my stop up here just so I could account for this fair value gap up here, just in case I wanted to reach into that fair value gap before heading downwards. Going back into the 1 minute now, what we can see is exactly this. So I saw that this is the exact precise candle on the M1 that actually broke, that actually caused the market structure shift, sorry. And that's where I knew that price was most likely going to come up in there and then make the range. So we caught nothing short of just like, this is peak sniper entry right here. Like, you can't even see it get tapped, and then boom, just make the range. So that was quite good. I was actually on the phone to my mom as I was catching that. I guess the only thing that maybe could have been improved about this trade is, let's say if the stop was like this, but then that wouldn't make sense, because not only is it not realistic for you to have a 0.4 stop, but also, what if this imbalance wants to get filled? You're just gonna feel like an idiot, right? So yeah, that was the premise behind that trade right there. And then our last setup was on Friday, London close. Taking a look at it, we can actually see that, you know, there was NFP New York and then high impact news in London close. Now, historically, when there's an important news driver like NFP, like FOMC or whatever around New York, it's gonna like clear up, and generally you're gonna get clean price action around, you know, a couple like 45 minutes after. So like London close should have, I was like, yeah, cool, London close is gonna be great, right? The reason why I didn't elect to trade London on Friday, by the way, is because of like, it was ahead of NFP, so I didn't want to be in choppy price action. Obviously, when your stops are as tight as mine, you really want to consider what sort of conditions you're going to be trading in, and is it going to be good for the conditions that you want to use. Now, if I was going to trade the London session, I would have been on the charts by like 2:30 latest to see the setup form. And let's see at 2:30, what can we see here? It's within those fib levels there, and we get a market structure shift here, which then comes in, comes down, and comes up. See, it would have been choppy, exactly as I thought. Exactly as I had thought. It would have been quite messy, to say the least. Because if you look at even what happens around 2:45, basically a bunch of nothing, a bunch of choppiness, and that's not what we wanted. So we basically foresaw that. But what happened in London close on Friday? Well, this is the tragedy, lads. This is the absolute tragedy, because we saw New York do this massive run up after NFP, and then tapping into a weekly bearish order block, which I'm not going to show you guys because it's just long to go back and find the M1 chart afterwards. But tapped into a bearish weekly order block, and then, you know, obviously I'm expecting bearish price action afterwards, ahead, like, you know, after news release and whatever, when we get like a kick in volatility, right? Now, I was right about the draw on liquidity. I usually am, you know, alhamdulillah. I'm usually right about the draw on liquidity. But what my problem is I let that get to me. I let the fact that I know where the drawn liquidity is likely to be based on time of day, based on PDA rates, etc. And I just didn't account for the fact that there are things that I'm simply not going to know. And this was one of our beautiful statistical losses that we talk about on this channel, whereby you do everything right according to your trading plan, and it just doesn't work out. And that's a beautiful thing. There's nothing wrong with that at all. You know, those are the type of losses that you should strive for, and this is the type of loss that I got. I risked 2% on this because, you know, it was a weekly level and whatever. But yeah, overall, the tragedy here, lads, and where I actually lost my account here, is when Now there's what we get stopped out ahead of the news release because it's coming at 10. So we get stopped out ahead of the news release. We get wicked out like ever so slightly. Like if you can even see, like it's just the pause. I was actually about to say it's just the hey yo. Anyway, yeah, it was just it like we just simply got wicked out here, and then the news embargo. So when I got wicked out, I was like, I know it's gonna go down though. And actually, I should have never said that because you don't know anything these markets. You can only say what it's likely to do based on things that you've seen and time and price theory that you know. But in my head, I was thinking, I know, and I was using that dogmatic statement of I know, which basically caused me to lose my ass on Friday. You know, all week I had mitigated drawdown, and I was gonna start this week in a pretty good shape, right? But I let I risked 2% going counter trend, which I don't think I'll be doing that again. And number two, I risked even higher on this revenge trade right here. So when we actually got tapped in again, like on the 10 a.m. candle, I risked about 3% because I was so confident. And I lost my ass, obviously, and breached the account because look at this wick now. And then it just went all the way almost to my TP basically. What was I? I was like 1.6 pips off, and that would have been a what? That would have been a 1 to 9. So it's it is what it is. It is what it is, really. What I discovered about myself from this as well is because I seldom lose, like, let's say 3 trades in a row, right? I can risk 2% per trade on a challenge account, especially a cheap one like Equity Edge. So that's what I'll be doing going forward. And also, I will be mitigating my revenge trades because, like, I don't usually revenge trade. I usually just hold my out. But because, like, I was so confident in this trade, that's what led to my downfall. So, in my journaling, I just, learned that I need to be humble. And the market humbled me. So, yeah, I just learned that nothing's guaranteed in the markets. You don't know what you don't know. And you don't know what, especially when you're trading so close to news, you don't know what is going to happen. So you should always, lock in profits and basically protect yourself and understand that if you get a beautiful loss after following your trading plan, then it's so. But yeah, those were the trades for last week. I'll be honest, this is a learning process at the end of the day, right? Nobody, well, people do, but it's uncommon to see people go in and pass their first pot from challenge. And to be honest, I'm gonna blow as many as it takes. Pause. Pause. But I'm gonna fail as many challenges as it takes for me to pass. That's just it. And I'm just taking you guys along the journey with me. And you guys are gonna see all the blown challenges, all the past challenges until we get to multiple 7 figures in funded capital. But as usual, if you guys enjoyed, please drop a like, comment, subscribe. It really helps with the YouTube algorithm. And until next time, ready.